All right, everybody, let's get this thing started. I'm going to let that timer, it had a minute left. Let's go. It's 3 o'clock Eastern time, September 18th. Happy Fed Day. We just had it. So the reality was the Fed did cut. Listen to the press conference with Powell. He's taking the Q&A. I mean, he crafted it very nicely. It sounds like the Fed was right on the cusp of a little bit of a victory lap, but mindful of things that they need to get through with their dual mandate by the next, couple of months. The biggest benefit that I see, I mean, price action today. This is a 1-minute chart on the S&P. You can see that it just ripped to the upside, pulled right back, and we have been just in a chop the entire time as we get to the final hour. So, we're going to see if this market is capable of actually breaking lows and going somewhere for the day. The entire day, mind you, this market went pretty much nowhere. So it was an interesting day. Those members with me in the daily profit play, we ended up taking a really nice trade on the SPX today, but it took all day and we still didn't get the profit that we wanted. So we ended up taking the profit early, which was fine. That was the right decision, and we didn't have to deal with any of the consequences of potential noise. You can see all the order flow came in right at the Fed, and the market still is having a hard time going anywhere. So don't be surprised if the market comes down and tests the Fed low or test the low of the day. But if that is a bouncing point, there's some good short-term price action as we continue to maybe see some bounces. So I'm not taking the bait. We might see a bunch of kind of bear trap, bull trap scenarios just intraday trading. But if I see, and I'm still going after this level, but I've got a 570 SPY call. It's actually a 569, but my target is the 570, and I'm looking to see if we just kind of base here a little bit, have some chop, but the market finds a way to still go higher tomorrow. I will be watching the IVX tomorrow as well. Going to the SPX, we expected to see about a 58-point move today, and it was spot freaking on. So now we're looking at about 30 points by the rest of the session. We had about 57 to 58 points expected on the day, and if I look at the SPX, you're going to see it do pretty much exactly that in the first minute. So this market was just antsy all day, and you can see that first rip on the news went up about 52 and some change, so almost 53 points. Now the SPY, interestingly enough, is right down to the wick low with that immediate reaction. So unless we break that SPY candle low and actually confirm a break below it for the final hour of today's trading, I think this market's essentially established the low of the high, and it's choppy, and we go into post-market. We're going to see where things settle tomorrow. Okay. William says, you like the dollar sitting at 28.88 to go up to 3,600. No, that's not at all what I'm doing on the dollar sing. I'm actually doing the dollar sing with the 121, 120.50, and 120. I'm trying to buy this thing at crazy lows. So I have been in this dollar sing on and off for the last 4 or 5 years. I like the 130 handle, but we have had a nice clean break below 130. The dollar's been weaker. I wasn't trying to call the bottom in the dollar, nor am I trying to do it now. So to answer your question there, William, I'm only looking to see if I can get this thing to come down to these crazy historical lows and buy it at what I think is just a beautiful bargain price. So that's what I'm doing. So I've got a 121, 120.50, and a 120 pending order with no expiration, no stop loss. I'm just going to buy small and then build a position. And just like I did here when I started to buy this area, trade it to a 3 or 5 wave move. This area, 3 to 5 wave move, trade some symmetry. So if it makes its way down to these levels starting to get filled, I'll look for a 3 to 5 wave move. Probably go from 120 back to 125 or 120 back to 130. And that would be my kind of investment play on the dollar sing. Okay. But good question. Let's take a look at the markets really quickly. So SPY, again, checking the price action here. Let me set a chart alarm below. Let me not just go with the SPY low here, but let me see if we break today's low. This is the 8:30, or this is the 9:30 to 10:30 opening range breakout. So we had a bit of a fake out right there around 11:46, came right back into the baseline or the midpoint of the day. If we break the low of the day, let's see if that actually gets there. That's 561.38. We may or may not, so let's find out. But I'll just watch that price action. And I've got my gamma levels on my other screen, so I'll keep an eye on that one in the near term. Futures market starting to show a little bit of a downturn. We're back to the weekly VWAP level. Not convinced this is necessarily going anywhere for today, but futures will certainly be active, likely through tonight into tomorrow. I'm looking for maybe some fresh futures trades in Thursday, Friday sessions. Look to see if we have some good order flow. This is really the market's reason, excuse, catalyst to open up the floodgates and start to move. So if we're gonna get some direction this week, I would imagine this is the reason why we'd have some direction. So if I zoom in on the weekly, okay, look at this weekly candle. Get rid of this fib for a second. If I zoom in on this weekly candle, all we have is a bunch of noise. So far, this is a long wick and a little teeny tiny body. So we either have to make up some ground where these bulls come back in a big way to retest today's highs, or this is putting in what could be a very nice evening star where we have this bullish decision, indecision, and then a bearish decision. So if we top out here, we have more volatility through September, possibly retesting lows of August, and that would look something to the tune of this, right? Bit of a broadening pattern, which is a perfect fake out for the bull trap and the bear trap, and we just remain in limbo, and we have to figure out how to survive this. Now, I like the idea of buying low, and so I'd put a couple of spots in here, like maybe a credit spread, at the August lows, maybe trade some, slight out of the money to get filled, maybe get 30, 40 cents on the dollar if we come down to those levels. But I'm thinking that we have kind of limited upside here with today's price reaction. But I don't know. We could actually, overnight maybe gap higher. But what I'm seeing right now is the market is not really loving the break, and we're looking to maybe test that low. If we break below it, I'm looking to see if my gamma levels start to light up to the downside and maybe fill in the gaps where there's room. I mean, if we go to like a 15 or 60-minute chart here, we've had today's trading, yesterday's trading, Monday's trading extremely calm. I think everybody can see here pretty easily that if we break this floor around 560 on the SPY, if we break below 560, there's room to fall, because here is the post Labor Day sell off, and that was our Wednesday CPI move that went all the way back up to retest those highs and actually get to all time highs. So there would be room to break 560 and possibly head back down into that post Labor Day sell off level around 540. And that's actually what I'm playing. So my SPY, I'm going both ways. My Qs, I'm going both ways. My Nvidia, I'm going both ways. Because I don't know. I mean, if the market likes this and it finds a way to say, look, it's choppy today, but it gives the buyers a chance to come in and take it up to highs, sure, maybe. But if the market is like, you know what, this is a terrible decision, the Fed's behind, everything's bad, even in the short term, okay, there's opportunities to buy and buy. I still like where we're at. I'm not a perma bear by any means. I think that we should expect some volatility. I had some interesting reads that I posted in my Telegram and Discord today. I'll show that right now. So this is the chop action that we saw just this afternoon during the meeting. That's my dollar sing trade. I took these screenshots from the press conference. So listening to Powell speak, assessments of appropriate monetary policy. This is the dot plot. This is what was posted in Financial Juice. This shows for 2024, all of the Fed speakers. Okay. This is interesting, but we're sitting here right now. They just cut to 4.75. Okay. Which 4.75 is right here. Now, we're showing that two Fed speakers are essentially looking to hold and pause there. You have 1, 2, 3, 4, 5, 6, 7 that are looking to maintain, okay, possibly see one more cut by the end of the year. And you have the rest that are looking for another cut. So I would say that November, December, it's probably going to be data dependent because this is what the Fed always does. But November, December, the Fed is likely going to line up another 25 basis points for each month. Now, the Fed tool was giving me a little bit of a headache because I'm sure everybody and their brother and sister and dog was taking a look at it. But here is September. There's your cut. And of course, this all changes after the fact. But the current rate was 5.25. Now the current rate is 4.75. And this all was like a wild couple of weeks to see how this thing was, 25 basis points pretty much baked in, 80+%. Then it got to 50-50. Then it flipped and went to a 50 basis points cut. Then it went to 65% to 40. And today it was like 55 to 45. It was a bit of a coin flip, but the probability did in fact win out. They did cut 50 basis points today. Now go to November. I'm trying to go to November. Oh my gosh. All right, let me just get out of this tool. Let's see if I can just refresh it. If November looks any different, I'm looking to see what the market's anticipating for a November, December rate cut. If we're going to cut another 25, 50 basis points, we'll find out. All righty. See if this loads. If it doesn't, if anybody can get the Fed Watch tool up and see like a November, December print, will you do me a favor and try to post an image in Discord? I'm going to see if I can use that. Let's post it in the free group chat for Discord. So if you can get an updated November, December probability for the Fed watch tool, I want to see what November, December look like if the Fed is still looking to be cutting another 25 or 50 basis points. So either the actual month itself or there's that probabilities tab that you can click on and that will show if we're going to skip, 25 or 50 basis points or keep a pause. So right now this looks like it's still loading. November is not changing, December is not changing. So yeah, it's broken. All right, I'll come back to that and see when I can get a refresh. Anyway, all right. So there's our SPY. Now, like I said, I'm trading, and this is my center point. 562 is my center. I'm looking to see if we go up about 10 points, down about 10 points. That's going to be my break even or better. And Josiah, you know that I'm in a live session, right? Okay. So I need 10 points. That's what I'm looking for. On the Qs, I need 1150 from this center. 471.50. We're trading at 472. So the market still has some work to do if we can get some volatility. I went out to October 4th. This isn't a huge hurry. This gets me through the rest of this week. We have triple witching on Friday, which means you have stock expirations, index expirations, and index futures expirations all Friday. We go out one more week. We have the 27th, which is the final full week of trading in September. You get to the 30th. That's the end of the month and the end of the quarter. Is that enough to get the market to move somewhere? If I get, even if I get a weekly average move, that should be enough volatility to get me some type of profit. So that's what I'm banking on with Qs and SPY. I also did the same thing on NVIDIA. NVIDIA is slightly softer for the last couple of days. 116.50 is my center. We're trading at 114.17 at the moment. If we get down to this low at 102, that's enough to grab some nice profit. I'm needing an 845 move. That would be a $12 to $13 to $14 move. If we get to the upside here at 130, that's a $16 move. Same type of thing. All I need is some direction. Maybe I get it, maybe I don't. But I'm giving myself some type of time where we get through the rest of this month, which officially wraps with the quarter, and then we kick off a new week with non-farm payroll on Friday the 4th, and those are my expirations. So hopefully I can get at least a weekly trading range of direction over the next 2.5 weeks, right? That'd be pretty nice. And the big winner today, by the way, here is the 5-minute chart. Okay, so we're still coming right back down to the lows and going right off that level. If you take a look at my price action here, this 1-minute chart, if anybody is trading some aggressive price action today, this is a beautiful opportunity right there to be long the SPY, and you're already up a couple of bucks. So, I mean, it could be a late in the day call option. It could be just buying and selling. But movement wise and direction, you're certainly getting it. So a 562 is now up $2.50. That's got beautiful 0DT written all over it. If you're familiar with, like, late in the day, the final 45 minutes of trading, and you can see this turn in. I mean, my gosh, you could probably take a 20 to 30 cent debit and turn it into a couple of dollars of profit. But you're obviously flirting with the final trading session. But anyway, good stuff. It's just very respective of the noise that we saw right around that 2 p.m. rate decision. All right. Nimmer says shorted gold, faded the move, made some money. You shorted gold? How the heck did you make money shorting gold? Ah, there it is. That didn't take long. Did this thing this must have turned in the last like 15, 20 minutes then, yeah? There is your break on the announcement. Gold rips up to all-time highs again at 2,600, and yes, for the last let's see, roughly 45 minutes, gold has been turning nicely. So Nimmer, good job, dude. Let's give if I had a soundboard, I'd be playing the crowd going crazy right now. Nice short, yeah, very nice, very good. I like it. So yeah, gold had a nice little pivot. Not a surprise. I'm really not surprised now. My next guest. Not a guess. My next guess is that if gold is pivoting this hard, that my currency strength is also pivoting with some dollar strength. Let's see if I'm right. Because when I Checked it last, the dollar was the weakest currency pair today. Hey, the dollar pivoted right there. So there's your move on gold. There's your dollar move. Bounce, bounce. And that was the bear trap that I talked about on the dollar index. Yes or no? Does that look like a bear trap to me? Yep. Was it a bear trap? So far, it looks like one. I wouldn't be surprised if this level holds on the dollar and we just kind of work our way back into this range. One thing that's going to be interesting to watch is this potentially, and again, I don't know this, right? There's clearly pressure on the dollar. The market wants to sell the dollar. Big institutions want to sell the dollar. I think for the stock market to go higher, the dollar's got to get weaker. But for right now, this was too easy to think like dollar weakness right away because the Fed's cutting. So is every other central bank. And this has also been in a trend for the last 3 months. So I wouldn't be shocked if the market does make a bullish attempt back here, chops around. Maybe the dollar can retrace a little bit, but that would be where I'd look to fade the dollar. Hopefully that is the case to give me an opportunity to look for resistance, look for structure, look for areas to sell, and then return this dollar weakness. Okay. But not a surprise. So, Nimmer, as you took your gold short, anyone that got that flipperoo on the dollar, nice little short term action there, which means our euro dollar is probably turning south slightly. Yes. Pound dollar turning south slightly. Yes. Aussie dollar. Yes. New Zealand dollar. Yes. Dollar CAD. Yes. Dollar Swiss. No. Kinda. Wick lows. I'm still long dollar Swiss. Dollar yen, another one that should be turning up. Look at that on the dollar yen. 140, it's up 120 pips. So that move is about 190 pips on the day. We have a nice little 150 pip reversal just in the last maybe 15 minutes or so. Look at that. So there's your reaction for the 2 o'clock news. Break, retest, fake out lows. There you go. So all this created was a nice little news candle. So we break, retest, we flood a little bit down, get some oversold conditions, wait for the trend line to break, come right back up and rebalance the entire thing. It really is just a classic little price action example. Just price doing what it does. You know, when we've got super liquid markets and we've got lots and lots of order flows, there's going to be a lot of efficiency, and that is exactly that. So, you know, you get this breakout and it pulls back right to it. Same thing on gold. You get the breakout, it pulls right back to it. On SPY, SPX, you get the breakout, pulls right back to it. Same thing. So there's no real winners today in the short term, except for maybe the Russell. Even that's not really convincing me now. This was up 2.3% when I posted. We're back to 1.08. This thing is fading hard. All right, small caps. Well, you had me at hello, and now they're breaking down, giving back most of the gains. The Qs are flat on the day. The SPY is barely hanging in there. The Dow is barely hanging in there. The Russell's hanging on to some gains, but not by much. Let's take a look at that on the higher time frame here. IWM on the daily. Okay, so we have had from our post Labor Day sell off pivot here on the 11th, and then we had that big CPI news that ripped higher. We've had a pretty big upside where the IWM's gone up, wow, 10%, man. That's crazy. 10% in what, 5 or 6 trading days? Still not convincingly higher or lower. I am long on the Russell. I still have positions going to target these all-time highs at 240 and 245. I do think small caps can benefit from the rate cut cycle, but we're clearly going to deal with some noise right now. We're clearly going to have some noise in the market. We go to the VIX. VIX is a little bit elevated, but not setting off any alerts or anything like that. We're still at 17.8. SVXY still holding my longs there. DXY watching for that bear trap, and that's what we seem to have so far. I think the dollar might continue to stay in this choppy environment, okay, until something happens where the near term, I can see the dollar just making a bit of a run to the halfway point, and then I want to see if the dollar turns. It gives me a chance to resell it for a post September breakout or maybe a Q4 breakout. Oil still holding the lows pretty nicely. I'm long at 65.50 with my CL spread. There's my trade right there. Natty gas, nothing until maybe we come back and revisit the lows again, maybe $1.80 to $1.60. Gold. I mean, it doesn't look like it's doing much of anything, to be honest. I mean, that's a nice little short in the very short term, like Nimmer took, but I'm not. I don't know. I'm looking at gold as I love a pullback. I'd love a pullback there. I'd love a pullback here, and I'd love a pullback here. So if I'm going to get positioning on gold, I'm probably doing this in a much bigger way than I would be this or this. I still think those are potential bounce points, but I'm long GLD. Okay, I was long gold the entire year. I was long on this breakout right before the year started, and GLD cashed in on some options, still holding shares. GC did a bunch of credit spreads in here as we've been making higher highs and pausing. So just trying to generate some income, and I'll continue to do that. If we get more positions to add, I like this area. I want to see if we come back and revisit this trend line. I think gold stays it stays bid really nicely, but I'd love to see a pullback. We're getting some waning momentum. There's a lot of divergence on gold on higher time frames, so I think a pullback is in the cards. We'll find out. GC, same thing, looking for some support. Silver, you dirty dog. Silver's pulling back off this resistance level. I still think it's an accumulation phase on silver. I like this $26 support. Let's see if we can come back to it, chop around in here. I'm still going to build. I'm still going to build on silver. I'm looking to go after 35 and change. That's target 1. And then 45 is target 2. So silver is one of my bigger investments, and hopefully there's a lot of upside there. Bitcoin fading a little bit. We tapped up towards 61.3 today. I'm still watching closely. I'm watching basically that structure right there. So if Bitcoin works its way back down, test, maybe goes a little bit lower, I'm just going to keep an eye and see how this area behaves. Something like that. So if we're making lower highs and potentially lower lows, I'm just going to wait for that structure to break. And then I'm getting long on something like that, trying to go back to all-time highs. And maybe that establishes the bull market and the trend to get up to 100K or higher. Pure speculation, but potentially a great technical setup with some asymmetry. So I'm going after that. Gold will drop to 25.50 to kiss the weekly pivot. Cool. 25.50, that's not that far away. Yeah, that's right there. I mean, honestly, I think gold's going to pull back to 25.30 just because that's good structure in the market. Ethereum still pretty sideways. Japanese yen, we are pulling back. You know, I don't know. I'm actually wondering here. Let me see what I can get. If I did a credit spread 0.0, actually, you know what? That'd be stupid. Bank of Japan is Thursday to Friday. I have no interest in doing that. I could just see the Bank of Japan allowing the Japanese yen to weaken a little bit, try to boost the Nikkei, but I'm just going to wait. I'm still long FXY for all the way up to 2026, just in case we eventually get like another unraveling of the Japanese yen. I want to be long the FXY. Let's see here. UK markets and German markets. DAX is up near all-time highs. FTSE just off the highs. China, a little bit better here the last 4 or 5 days. That's not a bad thing. Brazil still sideways. Mag 7. Apple, not much. Amazon's flat. Google, I actually do have some positions on Google. I have a 160 by 150. I'm willing to own some shares of Google. And I'm willing to own it because to me it's going to be pretty easy to repair. Now I may not get assigned. Let me go to my Google positions right here. I may not get assigned on Google. Let me check here. So GOOGL. There we go. So I have a 130 cash secured put, and I've got a 165 by 160 credit spread. So this is out to December. So this means 2 things. If the price drops farther and faster, then I may get assigned early, and I'll then use my long put to lower my cost basis and then try to repair the stock for maybe $3 to $5 a share. I think that's certainly doable over maybe a 30 to 60 day cycle to repair Google and make a few bucks on taking some ownership. So I don't mind taking the shares. I mean, my gosh, if I get assigned at, let's say 160 or even push it down lower, I mean, if I could own Google at fresh lows here, I would be owning this thing at like, what, 30% on sale? That's a 23% move to the downside from that drawdown. Yeah, I mean, if I get a 25 to 30% discount, I'd like me some Google. And it's not necessarily a long-term play. It's just more of a, can I take it, lower my cost basis, flip it? Yep, all the above. Meta sitting here near all-time highs. Probably a lot of chop in this as well. A lot of chop. Something like this where we might have a lot of indecision. Maybe not able to justify all-time highs for a while, at least until we get into earnings season, which is going to be in October. Microsoft came back in a big way. I've seen a lot of news like BlackRock and Microsoft are pairing up for like some AI project. Netflix just at the all-time high, same type of thing, looks very similar to Meta. Nvidia, I need anywhere between like a $12 to $15 move. Tesla, Tesla has what could be a very nice looking head and shoulders, bullish, but I'd like to see if Tesla just has to prove it. Tesla needs to break above 280, and I'd like to trade to all-time highs. Otherwise, I just want to see if I can get some more accumulation in Tesla, maybe a bear trap. I'd love to buy some Tesla down here in the low 100s. I have a 115 right now by 100 ratio spread. So I'm willing to own some Tesla, but I want to own it basically at $100, and I would own it and stash it away and just try to make, I don't know, 300% upside on it, all-time highs. I think Tesla's going to be a big play in the energy space. They're a disruptor to the auto industry, but they're certainly more than an auto company. But we'll find out. I mean, they could also ultimately face a lot of competition in China, and maybe they lose market share because of that. So who knows? There's never a guarantee, and they could certainly face some headwinds. And the nice thing is everything from the Elon Musk side of things kind of quieted down, so it doesn't look like you're investing in some type of rogue individual. All right. What else do we have here? Bonds, all the fun stuff. TLT is pulling back today, so bonds were up as high as 101.65. They pulled back a decent amount. They pulled back about 2%. If you go to the yields, the 2-year, look at this, the 10-year, the 20-year, the 30-year, you get that long-term bond with today's 50 basis points cut. Your near term is dropping, so the 3-month is dropping hard, right? And your long term is actually ripping higher. So the 10-year is off the lows. The 2-year is indecisive right now. But there's a couple things about this Fed and what's considered restrictive. Okay, what is considered restrictive? Fed has been restrictive. So the 5.5% interest rate, and technically it's always this weird window. So it's 5.25 to 5.5% interest rate was, right? That was our peak rate. Okay, now we're at 4.75 to 5% interest rate. So the restrictive rate, to be restrictive, Fed has wiggle room to lower rates closer to the 2-year, which right now is trading at 3.6%. And the Fed has wiggle room to lower rates closer to PCE, which is around 2.5 to 2.6%. That was the last reading we had with core PCE or regular PCE, not core PCE. Okay, so the Fed has about 200 to 250 basis points to lower rates. Now, if the Fed brings rates down below 3.6%, we're now considered neutral, okay, or back at equilibrium. If the Fed can lower rates to 3.6 and still be above the CPI or the core PCE or the PCE, then we're still restrictive, right? Which this is the preferred measure of inflation by the Fed. But the Fed is, if you listen to Powell today, he didn't explicitly say it, but it was kind of hinting towards like a victory lap where they did have a lot of positive spin on everything that came out of his mouth. We've seen our trends going lower in inflation. We don't want the labor market to soften. We do believe that this rate cut will help, blah, 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 blah. So, I mean, they're not saying that we're the greatest of all time. We're not saying that we've declared victory on inflation and everything's perfect. What they are saying, though, is inflation is trending lower. There's some more data to get through, but they're focused on the dual mandate and data that comes in. But it was appropriate to adjust policy, give some relief to where it's needed. Housing market, long-term financing, debt restructuring, small business, all these things that are looking for increased, debt, money supply, liquidity to then fund, restructure, grow. This is what's helping. So does the market take this and run with it as a positive? Longer term, it's probable, right? And I'll show you that in just a moment here. And there you go. Burns says market will crash very soon. Perfect. Crystal ball Burns. I mean, look, anything's possible. But here is a data point that goes back to 1980 that says the exact opposite. So this is what I like to use. Let me show you where I pulled this. So this is the Fed has cut with stocks at all-time highs many times before, and the bulls actually like it. So when we're within about 2% of all-time highs going back to 1980, the Fed has made cuts and the market's still higher after 3, 6, and 12 months. Now, what I think is interesting is it's not all sunshine and rainbows, right? The 1 month return, so meaning now that we cut today, the 18th, 1 month later, the average return is actually negative. So we might still deal with about 30 days of chop, and this actually holds true. So 9 out of 20 times, the 1 month return has been positive. That means that 11 out of 20 have been negative. So I would not suspect higher highs in this first 30 days here. But we go out 60 days, the average return is 2.1, the median return is 3.3. We're higher 15 out of 20 times this has ever happened. Okay, so you can get your head around a 75% probability that will be higher, right? There's still five out of 20 that haven't been. So that's an outlier, right? That's 25%. That's still a probability we can trade. And that's, meaningful protection that we would have to be on the safe side. Go out 6 months, 6 month return 3.8, median percent return 6%, 15 out of 20 times. Again, 75% of the time it's been positive 3 months and 6 months later. 12 months, this is where the track record gets really interesting. 12 months after the first cut into those all-time highs, 12 months later, the market is 13.9% higher on average. Median return 9.8, which I think is interesting that the median is actually slightly lower than average, but it happened 20 out of 20 times for the last 44 years. Now, could it be different this time? Of course, right? We could go 20 for 21, still use the same statistic and say, look at this, 20 out of 21 times, it's been higher. But that one time in 2024, 2025, remember when? So maybe it is different this time. But I'm thinking that if there's anything left in this late cycle rally, the Fed is trying to navigate the soft landing. The Fed is trying to thread the needle, and it's not easy. We still have employment news coming as soon as 2 weeks. We still have inflation data coming all through October with earnings season until we get to the next Fed meeting, which is November 7th, 2 days after the US election. So I could see the market being very indecisive over the next 30 to 45 days without giving us much of anything outside of maybe some volatility highs and lows. Now, I'm hopefully going to take some profit on some volatility highs and lows. And maybe that's tomorrow, maybe that's Friday, maybe that's next week or so. But I do want to see what price does. I think it will struggle to justify going higher. I think it needs more than just today's rate cut. Okay. I said this for weeks. With this rip here post Labor Day, with this rip here, this market was thinking that the Fed's cutting. And it went from happy being at 25 basis points to now being happy at 50 basis points. But we're sitting here tapping the all-time highs in the SPY, tapping the all-time highs in the Dow, and we're struggling to justify higher highs. So what I think we still need is we need positive earnings. We need to have better employment news over the next 3-4 weeks, and we need to have still tamer, lower inflation news. If that happens, that's good news is good news. Hopefully no bad news to keep this thing going. But if it fails, there's volatility to the downside. We also have earnings season. Okay. Companies are still making a lot of money. Companies are still buying back stock. Forward guidance is kind of mixed, but for the most part, it's optimistic with the AI space and what they're looking to spend and trying to get some ROI. The private equity market is loaded with fundraising for energy and loaded with AI, AI server space and all the stuff that's like, arguably the future. But I don't know if that's going to return. I don't know if that's return on capital. It's unproven right now, but it's certainly a lot of speculation that big, large cap tech is playing. So I think we have volatility. I think we have limited upside, and I think we have easily, downside, and we have downside levels to be mindful of. But I'm not going to call the bottom. I'm not going to call the top. If it comes back down to a level that I think is attractive, like the August 5th lows, or coming down close to them, I'm probably going to buy the SPY. And I'll probably buy the Qs, and I'll probably buy the DIA, and I'll probably buy the Russell. And I want to see if this market can actually have a correlated rally towards the end of the year. So do we get, let's just say that we have, September is right here at the top, right? Let's say the market's been, up here. We had our July to August sell-off. We get back to the highs. We fade again. We're up to the highs. This is where we're at. Over the next 30 to 45 days before we have the next Fed meeting in November, I could see the market doing something like this. Slightly higher highs, slightly lower lows, slightly higher highs, slightly lower lows, something like that. And then the market's going to use everything that it can to hopefully make a rational decision on is it justifiable to go higher? Earnings season, the election, Q4 rallies, open interest, sentiment, rates are getting cut more. It's gonna force money out of the sidelines, out of savings, into equities, into anything that's going to offer a yield. Equities is obviously offering upside potential. It's an inflation hedge as well. I mean, assets go up when inflation is higher. So if we have a flare up in inflation, you're gonna be happier in stocks trading something because the dollar's probably just going to get weaker. So anyway, I could see us dealing with a lot of noise here the next 30 to 45 days. And then this combination of news and data plus earnings, catalysts, the Fed, are we cutting more? All these things have to come into play to kind of give us this last bit of rally. So, and I'm not necessarily bearish, in the near term, but I would say that if we come into like Q1 and go into summer of 2025, I'm turning a little bit more bearish going into that time. I think whoever comes into the presidency 2025 is going to have their hands full. I think it's going to be it's time for some type of correction. Having a 10% haircut here and having it be just one off, I think that was the market giving us a taste of like there could be some ugliness ahead. But you never know. I could be dead wrong, but that's why I'm also open-minded. I think if you're just sitting here trying to tell me that the market's going to crash and it goes up 10%, what are you doing with your portfolio besides being wrong? you know so I'm at least playing the downside with hedges, but they're cost effective, they're necessary, they're cost effective. They pay out 3 to 1, 5 to 1, 10 to 1, but they're there when I need them. But otherwise I'm staying cautiously bullish, right? Yeah. So yeah, manipulation at its finest, not selling. Yeah, I get it. So it's pure manipulation here, right? There's the news, there's the chop. We haven't gone either way above or below. This is classic noise right into the close today. And all the real excitement's truly going to come Thursday, Friday. You know, I'm I don't know. I'm going to watch and see like tomorrow morning during the daily profit play. Let's assess the IVX. Let's assess the daily move. Today was an interesting day to kind of give us like, look, this market was not a normal day. This market was so wound up, like anticipating the 2 o'clock news, that even all day that we sat here with this perfectly indecisive price action, I didn't get the credit and the decay that I wanted. So there was just clearly like volatility baked in today, and all these order flows just hit the news in real time at 2 o'clock, and it's just been chop suey ever since. So after the market closes, let's see how it all shakes out. Where we breaking lows, we breaking highs. Is there anything post market? Is there anything pre market tomorrow? Overnight, I don't think we really have anything on the calendar. Let me check and see if this is updated yet. Nope. All right, never mind. Let me go to the calendar here for tomorrow. So we do have the Bank of England in the morning. Let me see if there's anything with medium and low impact. Bank of England in the morning. Nothing in the U.S. outside of unemployment claims. Okay, so we've got unemployment claims at 230K, existing home sales at 10 a.m. Again, it's medium impact news. Unemployment claims says high impact news. And then we have BOJ overnight expecting to stay the same at 25 basis points. And that gets us into the old triple witching for Friday. So I do think the market is capable of opening up, maybe give us some direction by the end of the week. We'll find out. We have core retail sales on Friday for Canada. Nothing else major in the U.S. outside of member Harker at 2 p.m. to wrap up the day. But yeah, so tomorrow's a new day. Friday's a new day. Well, we got a few more minutes here. Any other charts questions you'd like me to take a look at? Asia session in the London might be fun. It might be. It might be. I mean, currency strength wise, I don't know if tonight is going to be fun necessarily, but I think Thursday, Friday, going into the the Japanese yen after a BOJ rate decision. Today, post Fed, we might have some moving and shaking. I think we have some Aussie news today after hours. So we have GDP for the New Zealand dollar, 6:45 p.m. Eastern time, and we have Aussie news at 9:30 p.m. So there's some news there to kind of kick things around. But I was surprised this week that we're watching the Fed watch tool at 5%, expecting that 50 basis points cut, but all the calendars said the opposite. All the calendars stuck to that 5.25, and they show that, oh my gosh, a surprise. I mean, we weren't surprised. We saw it changing last week. So anyway, but price action just gave us very little follow through. So the moral of the story today is not much has happened. It was a crazy indecisive day, and then just one fat finger order flow to the upside, and then everything else is garbage. The Russell has given, oh my gosh, Russell, you freaking turd, man. Look at this thing. Giving it all back. So that's unfortunate. Well, so much for outperformance on the Russell. We pretty much finished dead flat on the day. SPY's at 0.01, Q's at negative 0.4, Dow at 0, and IWM went from 2.3 down to frickin' 0.25. Yikes. Zero sum game. Let me see something here just for fun. Anybody in my daily profit? It's finally profitable. I bet you had to have like the big explosion and the balloon popping of IV today to get that thing to profit. But man, it wouldn't have been profitable until probably after 2 o'clock. And it wouldn't have been fun to sit through either because that move was a big old move at 50 some points to the upside. You don't want to be exposed to that crap. So anyway, that is that. If there are no further questions, I will wrap it up here for the final hour. We have 20 minutes before closing bell. I've gone through a lot of stuff today. I mean, I like the dollar was a bit of a fake out. I'm going to be watching that, obviously. Oil, I think we're holding support around 65 and change. Gold, I would like to see a pullback. We actually took out the news candle on gold, so gold may be pulling back a little bit deeper. Silver also took out the news candle low. Let's go to the DXY, see if we took out the news candle high. We did. So dollar, downside, upside, that's the bear trap right there. Gold, silver, we just did. Bitcoin, little bit of chop on the news, not really much to read there. I think there's some softness that might come in with lower highs, lower lows on Bitcoin. Everything else, currency wise, just kind of watching. This is another one that I'm watching closely. Let me go to, let's go back up here to the SPY. There's my chop suey on the 1 minute chart. Let me go into junk bonds. Let's go here on this chart. So a bit of a fake out on junk. JNK is the high yield bonds. This is your AAA versus triple B, your AAA versus B and C. Basically, if we're going to have tougher times in the market, we're going to have a credit crisis. This is going to go lower. I haven't seen it yet. We're actually making higher highs right now. And until this suggests something different, I think right now that everything just remains as is. We'll have some short-term chop and some noise, but we'll ultimately see if the dust settles after, 1 month, 3 months, 6 months, 12 months, if we actually start to see higher highs in the market as we've seen for the last 44 years. Uranium. Let me go to URNM. I'm going to go to the Sprott. Let me see where my Sprott is. So U.UN. Uranium has pulled back from 33 down to 24. We've had a bit of a pullback here in uranium around 33%. Technically speaking, I still think this is a healthy trend. I'm long uranium. I like this area right in here. So you can see that it's also the way that it's kind of behaving where it's high, low, high, low, and it's getting really, really choppy in here. To me, this sets up a nice spot for a past resistance becomes support. I think uranium has what it takes to maybe resume this trend back up to these highs. We could stay in a range for a while, but ultimately I'm looking for this to be a continuation. So I still like uranium. I'm just trying to stay out of the way. Trying to stay out of the way where I can get some lows in here, watch my positions closely, and then try to get this thing to go back up to the highs. That's where the big return is, in my opinion. And I'm not done there. I want to see uranium go way higher. But if we get filled, let's say around like $21 or so, I have a chart alarm set. We go back to those highs. That's a 65% upside. So yeah, I like uranium. My exposure is through URA, and this one kind of a bit more of a range. So if we have a higher low, that's fine, but I'm looking to get back in here with some support around this $20 handle. I have a handful of $20 puts. We have some highs where if we just come down here and bounce, there's a chance to speculate on that growth. There's a chance to see this thing actually go higher, with this being wave 1, this being wave 2, and then wave 3 starts to rip. That's the exciting one, is if you can catch a wave 3, there's a lot of money to be made there. So I like uranium for that. Yep. Also on commodities, I know this has been a conversation for a while. I do think commodities have been beat up in a big way. I wish it was lower, though. I mean, this is DBC, which is basically a commodity tracking. It's a commodity ETF that has a bunch of different exposures. So if you see here, we have industrial metals. We're breaking the lows on the SPY. Chart alarm's going off right now. Let's see here. 14 commodities drawn from energy, precious metals, industrial metals, agricultural sectors via futures contracts. Aims to maximize the potential roll benefits in backwardation markets, minimize any loss from rolling down in the curve in contango. So that's fancy talk for it's futures based. It's a derivatives and futures, and you're essentially just tracking commodities through futures contracts. I like I said, I'm not calling the bottom here, but if I go to the higher time frame, I would love to see DBC get into like a low, high. Let's see if we can find like this beautiful little 50618 zone and then kind of build a base and then see if this thing wants to go higher. I mean, I would be willing at the cost of a $20 ETF, I'd be willing to dollar cost average at 20 and 12 and basically say that's tranche one, that's tranche two, break evens halfway in between. And even when we get back to the highs, and this isn't COVID, by the way, like COVID was lows and we ripped to the upside. That's how I was really able to make a lot of money in 2022. Before we saw the bear market through most of 2022, inflation was an easy play and it was a great play. But I do like this trade overall. I'm just, rather than trading all the commodities and all the futures contracts, I just get some exposure through DBC. So let me go ahead and drag a fib on this one. This is one that it's on my watch list. And I kind of like that $20 zone, like I said. So let me put a fib on this guy. So low to high. And we're not quite at the 50% pullback zone. So I will draw a 5-0 to a, we could possibly pull back towards the 786, but I'd probably use that as a couple of dollar cost average levels. So maybe the 55%, kind of my in between the 5-0 and the 618, and then the 70% just to be above the structure over here. So tranche one, tranche two, if I needed to, I'd buy it at COVID lows because obviously we saw a rip off of that. So I'd probably do this. $1,000, $1,000, $1,000, dollar cost average into that with a break even, turn that into an upside. Let's see what that percentage would look like. If I took a $3,000 position and turned it into an 80+% gain, make a couple $1,000. Not a bad play. Moves the needle a little bit. So that's just rough. That's just rough. Dollar cost averaging, but something I think is fair. I'm rarely going to load the bus up on anything, so I just think it's just a little exposure. Find a trade that gets me a nice little 2, 3, 4% winner. Call it good. Do that, 10 times a year. I'm happy. Everyone's happy. Okie dokie. Anything else? Good on uranium there, Thomas. Yeah. I have been looking at palladium. I have been looking at platinum. These are some other commodities that I'm watching for futures. I'm not ready yet. I mean, this is looking like we're trying to round out. I hope we actually come back and revisit the lows. I'm going to set a chart alarm here on palladium. See if I can trade some futures at 904. We go 905. If I get a chart alarm back at that low, I will probably put in a couple of credit spreads here and see if we just can chop around. But if this starts to get to the upside and we start to break all the structure, then maybe it's beneficial to put in some type of long position with a directional play. There's a lot of upside potential there. All right, before we go, here's the current price. We are breaking the news low, and I'll see if this actually sticks around for the next 12 minutes. It could be a fake out. Post-market, pre-market tomorrow is a brand new day, so let's see how it plays out. But my gamma level have changed. All of a sudden, my 570 is nowhere to be found. So we'll see. I'm still going to hang on to it. It was a big level that is clearly faded right now. So I might be eating that debit that I took earlier today, which is unfortunate because I had that thing up. I had $1.50 up to like 320. I didn't protect it. I just that sucked. But it would have been stopped out at break even anyway. So now I'm just looking to see, do we come back and try to get back to those SPY highs? If not, we fade. Not a huge deal. I lose $155, but I could make $500, $600, $700 a contract if the SPY actually goes down to the volatility that I'm looking at. And then also I have some hedges in MES and ES this week. So I am looking at some short-term plays to the downside. If they pay out pretty well. My ES trade will probably pay out like, I don't know, anywhere between like $500 to $1,500. My MES could pay out another couple $1,000s. So I'll be watching those closely to see what we have the next couple weeks. How about looking at uranium? Ronald, did you just come into the webinar? I just talked about uranium to Thomas. I'm still long URA, and I'm liking this level that if we get a chance to buy again, I'm probably going to buy at 21 or 20. and just take another stab at it. So I like uranium with all the structure. Even if it's range bound, I'm going to trade it from 20 or 21 back up towards 28 to 30. Actually, closer to like 30 to 31. So I still like it. Okay. Carla says, lost a little bit on the call put trade this morning, but a gain of 100 on the SPY call. Very good. Very good. Nice. I'm glad you took that SPY trade to grab some profit. That was nice. Not sure how long you hung on to that trade this morning for the daily profit play, but we were out within about 30 minutes. You had all day to really see price cooperate. And I mean, it offered something, right? It offered something. It wasn't full profit. I don't think I saw the bid price ever below. Our credit today was 585, and I was looking for it to get back below $5 for a profit target. And I don't think it ever got there with the mid, but no big deal. Yeah, Ronald, no big deal, man. I just thought if you came in late, no worries. So anyway, I like URA. I'm still looking to get long if it pulls back into the low 20s. I like that position for probably some ownership. You know, I can trade options, but if I just own it at $20 or $21, I'm happy to own that, turn it into a 50% gain. Yes, please. Now I can leverage that obviously with options, but I got to be right on the timing, and sometimes that's the tough part. Thoughts on gold? I think the dollar gave us a fake out. I think gold is looking for a pullback. So in a way, it's like I think it's deserving, right? Gold pulling back. I mean, my gosh, man, we haven't seen a pullback in gold since when? I mean, this thing has been ripping since October 2023. Has only had just pauses. We haven't really pulled back. All this is like up and a pause, up and a pause, up and a pause. So I think a pullback is welcome in gold. I just don't know how deep it's going to get. So I'm not long at fresh levels. I'm looking to see like, can I get pullbacks in gold and then reestablish some fresh positions? Okay. Carla, just stay with me. You go do those live sessions. You can get in right with me. So tomorrow, we're gonna have an interesting session tomorrow. I want to assess a couple of things. I mean, we've had a good week. We are 7 for 7 this week with the daily profit play, and so that is, I think that's 10 for 11 over the last 2 weeks of trading, and that's a pretty good run. And the only reason I'm a little skeptical or hesitant tomorrow is I don't know if the markets are going to come out swinging with these big gaps. And it's like today the news is in, now the time's, but tomorrow's the time to market move. So we haven't really had. Look at this on the daily. Let me go to the 5-minute chart here. So on the SPX, we had a bunch of noise today, but look at our price action this week. Very little, very little, very little outside of the noise of FOMC. So this is perfect where it's like we can win, we can win, we can win. If tomorrow brings in some type of directional move, I don't know if that's what I want to trade. I might tighten it up tomorrow just for fun. We can talk about that in the live session in the morning. I might do a 5 point spread. I might tighten it up and just take risk off the table on my own side. I might trade it purely hypothetical, so I don't have to take any risk and I can stick with my 7 for 7 for the week. Okay, but we'll talk about that tomorrow in session. Okay, everybody. If that's it, I'll let you go. Thanks for being with me for the final hour. If you're watching this on YouTube, will you do me a favor and hit that thumbs up button for me? Like the video. That support helps. Also, when you're active in the chat, that helps kind of spur that algorithm along to see that we've got a good following. We're getting 200, 300, 400 people live every day, people watching the recording. So that does help, the old YouTube game that we play, which is, how does YouTube think like, oh yeah, these people are watching, they're engaged. It's those like buttons, and it's subscribing, of course, and it's leaving comments on videos if you're watching it, but also engaging and typing in the chat as we are live. That does go a long way. So that certainly helps me with the sessions as well. All right. So I appreciate that. If you're watching from LinkedIn, Landon, if you're still there, thanks for coming in, dude. Nice to see you. If you're watching from Twitter or X, nice to see you on Twitter and X. If you're watching from Facebook, hello on Facebook. Everyone else, YouTube, nice to be here. We got some new followers this week in Discord, which is great. And I'll see you tomorrow. Cool, everybody. Thanks. Have a good day.